Now, before we dive straight into the bull thesis, let me be straight with you about where IREN stands. In Q3 fiscal year 26, IREN reported 144.8 million in revenue. Now, it's important to note that they run on an Australian fiscal year. So if you are from the States, when I say Q3, it's going to be different to how you measure years in the States. Now, analysts expected 214.9 million. That is a 32.6% miss. Net loss for the quarter is 172 million. The company just issued 3 billion in convertible notes, which will eventually dilute shareholders. Goldman Sachs has a $50 price target on a $64 stock. Now, the bears are not crazy in this. The execution risk on a build out this size is real, and I want you to really know that going in. So let's talk about why the bull case still stands for IREN.
Welcome to the game, it's the Instant Stocks by Mikhail Kuhar.
Now, if you don't know who I am and this is your first time here, my name is Mikhail and I make videos every single day on stocks that can 5 and 10x in the future. And one of my highest values in life is freedom, which is why I'm a partner at X10 Day Trade, where over the last 4.5 years, we have built an AutoPilot software completely in-house that allows our team of professional traders to allow you to trade completely hands-off. From the hundreds of conversations we have with people trying to get into day trading, we find that about 95% of them are not profitable and usually lose anywhere from $10,000 to $30,000 in the process of learning and understanding the markets. We remove all this money you burn in the markets learning yourself. You allow our team to trade for you. And all you need to do is turn the software on before market opens every single day, and it syncs up to your Interactive Brokers account. So these are our results in our 3rd week of May. You can see here we took 5 trades this week. HIMS, we actually had a losing trade at the start of the week, but then the back end we went 4 from 4 green. So you can see the bottom there, the end of week profitability on these trades was 25% in 1 week. And you can see here when we closed out the 1st week of May, we had a 41% profitability in our 1st week of May. So far this month, we're up around 60% on our trades. And I also want to share with you a client's account from the start of May. These are the results he's gotten so far. You can see here also Yaron, $5,000 week, some other results from other clients here. And if you're interested in this at all, go to x10daytrade.com or click the link below and book in a call with myself. I'll walk you through all the trades we've had and better understand your portfolio and your future goals and see if it's even a fit. But without further ado, let's get stuck into today's video. So what does IREN actually do? It is a data center company. They build large buildings filled with computers, essentially, on a very simplistic high level. They hook those buildings up to massive amounts of electric power. They fill the buildings with expensive NVIDIA GPU chips. Those are the processors that run AI. Then they either use those chips themselves or they rent them to AI companies on long-term contracts. That is the whole business. IREN was founded in 2018 in Sydney, Australia by 2 brothers, Daniel and Will Roberts. They originally called it Iris Energy. The idea was build data centers powered by cheap renewable electricity, mostly hydro and wind, and use that power to make money from computing. They rebranded to IREN in November 2024. Today, they trade on the NASDAQ. So there's 3 big revenue pillars that they have. The first one is AI Cloud. This is the main engine for them. IREN rents out NVIDIA GPUs, H100, H200, GB200, GB300 to AI companies. Now, if you don't know what that means, that's just NVIDIA GPUs. So customers pay by the hour or sign multi-year contracts worth billions. Hardware gross margins are reported above 95%. That means for every dollar of an AI cloud revenue, 95 cents drops to gross profit. That's pretty good. That's software economics on a hardware business. Now, their target is 4.4 billion in annual recurring revenue by 2027. The second pillar here is Bitcoin mining, the legacy business itself. 52 exahash per second of capacity, around 1 billion in annual revenue. They sell all mined Bitcoin daily. They have a no-hold policy. Cash goes straight into funding AI expansion. Now, they paused expansion in March 2025 to focus on AI. Now, the third pillar is a data center colocation, a landlord model, essentially. IREN rents the building and power to other companies who bring their own chips. Lower margin, but stable. Being gradually converted to higher margin AI cloud, there's 4 key things I want you to look at the bottom of this graph and why IREN is essentially different. 5 gigawatts of total power pipeline globally, 3.1 billion annual recurring revenue already under contract, $70 the strike price NVIDIA agreed to pay to invest up to 2.1 billion in IREN, and they are 100% renewable energy powered. So if I explain the one thing that makes IREN genuinely different from most companies in this space, because it is a competitive landscape, The number one thing in there is just power. People talk about chip shortages. They talk about NVIDIA supplier constraints. But the real constraint on AI in 2026, I don't personally believe it's chips. It's megawatts. A single cluster of 100,000 NVIDIA Blackwell GPUs draws roughly 200 megawatts of total power. Getting 200 megawatts from a local utility grid takes years. Substations have to be built, transmission lines have to be laid, permits have to be approved. IREN started that process years before anyone else realized power would be the bottleneck. Today, they have 5 gigawatts of grid-connected power secured globally. That's roughly 17 Colossuses worth of capacity. It's a tough word to say, and we'll get to Colossus in 1 second. Their biggest campus is Childress, Texas, 750 megawatts operational. Sweetwater 1, Texas is 1,400 megawatts, energized April 2026. Sweetwater 2 in Texas, 600 megawatts, targeted late 2027. Texas in total, 2.75 gigawatts fully contracted, plus Canada, Spain, Australia in the pipeline. Power is the moat. IREN already has the power. Now, I'll walk you through what actually happened with the Anthropic SpaceX deal because the specifics are more surreal than the headline. Earlier in 2026, Elon Musk merged his AI company xAI directly into SpaceX. So xAI owns a data center cluster in Memphis, Tennessee called Colossus. Now, Colossus won 300 megawatts of power, approximately 220,000 NVIDIA GPUs, H100s, H200s, and Blackwell GB200s. Then in May 2026, SpaceX filed an IPO S1 with the SEC, and buried in that filing was a massive bombshell. Anthropic had signed a contract to rent the entire Colossus 1 facility from SpaceX. So what does that mean? Well, look at this. 1.25 billion per month, 45 billion over 3 years, 300 megawatts, the entire Colossus 1 data center, 220,000 NVIDIA GPUs, verified from the SpaceX S1 IPO filing, which we saw on May 20, 2026. Now look at the bottom section, what this actually proves. Anthropic is renting from a competitor. Anthropic and xAI are direct rivals in the AI model business. Yet, Anthropic is writing Elon Musk a $15 billion check per year. Now, if you can see Rufus, sometimes he likes to join the videos, so he's one of a couple rescue cats we've got in the house, so if anyone's looking for a cat, Rufus, can we get back to the video? You want to stay here? It's the mouse, isn't it? Is it the mouse? That would make sense. So why is he writing a check for $15 per year? Because AWS and Google couldn't build data centers fast enough. The constraint is physical, not capital. The second point in here is power is the real bottleneck. Colossus 1 is 300 megawatts. What stopped Anthropic from growing even faster? Just lack of data centers and power, not chips, not models, not money. The third point is IREN has what everyone needs. 5 gigawatts of power pipeline globally. That's 17 Colossus 1s of capacity. Microsoft, NVIDIA, and Dell have already signed deals. And there's some missing context that I personally believe makes this even wilder. Anthropic's revenue went from $9 billion at the end of 2025 to over $30 billion by April 2026. That's a 3x growth in 4 months. They have more demand than they can serve. So what's stopping them from growing faster? Well, it's not the AI models, it's not the engineers, it's definitely not the capital. It's the physical buildings and megawatts of power to run them. Now apply that directly to IREN. IREN has already signed a $9.7 billion deal with Microsoft November 3rd, 2025, $3.4 billion with NVIDIA May 7, 2026, plus $2.1 billion equity option at $70 per share, $1.6 billion with Dell for Blackwell Systems, May 26, 2026. Total contracted annual recurring revenue is $3.1 billion as of Q3 fiscal year 2026, targeting $4.4 billion post the Dell Blackwell deal commissioning in early 2027. And Sweetwater, 2 gigawatts of power sitting mostly uncontracted, is still available for the next wave of hyperscalers. Let me know in the comments, is this too distracting? Or like, are you cool if Rufus is just having a scratch on the laptop? This is ridiculous. Rufus, I think you need to go off. So one of the things you're probably interested in, how does IREN get from $61 to $100 plus? It really gets there in a few ways. There's 3 engines inside of it. Engine 1, the contracted annual recurring revenue ramped from 3.1 billion to 4.4 billion. This one is already locked in. It just requires deployment execution, commissioning the Dell Blackwell systems at Childress by early 2027. 3.1 billion annual recurring revenue going to 4.4 billion is a 42% revenue increase from deals already signed. No new customers needed for this step. The second part is the new hyperscaler contract for Sweetwater and the rest of the 5 gigawatt pipeline. Sweetwater 1 is 1400 megawatts, energized April 2026 and mostly uncontracted. Sweetwater 2 is another 600 megawatts coming in 2027, plus Spain, Canada, and Australia. Now, the Anthropic SpaceX deal just proved that AI hyperscalers will pay almost any price for ready-to-go GPU capacity. AWS, Meta, Oracle, Google, Cloud, OpenAI, all of them are looking for more capacity yesterday. Each new IREN deal adds incremental high-margin annual recurring revenue. The third engine inside of this is just a multiple expansion one. Today, IREN's valuation reflects a mix of Bitcoin miner and AI infrastructure company. As AI cloud dominates the revenue mix, the market should re-rate IREN as a pure AI infrastructure play. Peer CoreWeave trades at 40 to 50 times revenue. At even 20x on 4.4 billion annual recurring revenue, that's an $88 billion market cap. Divided by roughly 240 million diluted shares, that's $367 per share. $100 is actually the conservative case in the multiple expansion engine. Now, if we look at this ladder, we're trading between $61 and $67 at the time of this video. So right now we're right on 64. So if we look at a ramp to 75, contracted annual recurring revenue ramps to 4.4 billion as Childress deploys. That is how we get to 75. Now, $90, the new Sweetwater hyperscaler deal adds incremental annual recurring revenue. $100, the market starts to re-rate IREN toward AI infrastructure per multiples. Each step is achievable independently. Combined, they get to $100 within 18 to 36 months under reasonable execution. One more validation point is the NVIDIA's $70 strike price. When NVIDIA signed their partnership with IREN on May 7th, they negotiated a right to purchase up to 30 million shares at $70 per share. Now, NVIDIA doesn't agree to a $2.1 billion investment unless they believe the stock will trade meaningfully above $70. NVIDIA sees the GPU demand pipeline better than anyone on earth. The $70 strike is the floor estimate for IREN's fair value. The stock is at $64 right now, and why $100 is plausible is so many of these things. 3.1 billion annual recurring revenue already contracted with a target of 4.4 by 2027. And NVIDIA's $70 strike price signals an insider floor. So what could go wrong? Q3 revenue missed 214.9 million expected, came in at 144.8. There's a massive CapEx commitments. 3 billion convertible notes would equal dilution. AI demand, cycle risk, execution risk on massive build out. So what do you do with this information and what should you watch out going forward? And what should you honestly worry about, and the other things maybe not give that much value to? So number one would be new hyperscaler contract announcements. The single biggest catalyst for IREN over the next 12 to 18 months would be this. Watch IREN press releases and SEC 8K filings. Sweetwater 1 has 1.1 gigawatts of power and most of it is still uncontracted. A deal with AWS, Meta, Oracle, Google Cloud, or OpenAI would be a major signal. If no new hyperscaler deals appear over the next 12 months, the demand narrative starts to weaken. The second part is the Dell Blackwell deployment at Childress. The NVIDIA $3.4 billion contract requires Blackwell systems commissioned by early 2027. If that timeline slips, the annual recurring revenue ramp to 4.4 billion gets delayed. So watch quarterly milestone updates very, very closely. The last part is Q4 fiscal year 2026 earnings, August 26, 2026. After the Q3 miss, the next earnings report is a critical test. Watch the revenue trajectory versus the 3.1 billion contracted annual recurring revenue baseline. Watch for management commentary on Sweetwater commissioning progress. A second consecutive revenue miss would put serious pressure on the execution thesis. Another part of this is just AI infrastructure in itself is one of the most crowded trades in the market right now. If AI demand cools, macro slowdown, regulatory shift, or changing investor sentiment, CoreWeave, Nebius, IREN, and the whole sector sell off together. So if we land this, the bottom line is the Anthropic SpaceX deal, $1.25 billion per month, verified by SpaceX in their S1 IPO filing, is the clearest proof yet that AI infrastructure is the most structurally valuable position in technology right now. The constraint on AI growth in 2026 is not chips, it's not money, it's power and data centers. IREN has 5 gigawatts of grid-connected power capacity, 3.1 billion already under contract, 9.7 billion from Microsoft, 3.4 billion from NVIDIA, 1.6 billion from Dell, and a target of 4.4 billion annual recurring revenue by 2027 from deals already signed. The path to $100 runs through 3 engines: contracted ARR deployment, new hyperscaler deals for Sweetwater, and multiple expansion towards AI infrastructure peers. The risks are real. The Q3 miss was real. The dilution is real, but the structural setup is one of the clearest in technology right now. As always, this is not financial advice. Look at through the lens of everything as objective as you can. Question everything, get different viewpoints, different opinions, but this is one of the biggest AI plays, I think, in the market coming into 2026, 2027, and especially when we start seeing movement in 2027 from the Bitcoin and the crypto market. Watch how IREN starts to move up. As always, my opinions, my thoughts, let me know in the comments what you think. And this channel will start to bring you IREN content every single day so you can adjust your exposure correctly. As always, I'll see you in a video tomorrow.